TGIF, happy Friday from Dan Frio, the rate update. I am Dan Frio, and this is your opening bell to real estate and mortgages. So let's get on to it. The biggest question was asked yesterday is, Dan, why are rates going up so fast? Well, let me explain to you what's going on in the background. So let's pull up this. The 10-year Treasury is roaring to a fresh new 2-year high on expectations, more aggressive Fed. So basically what the Fed did last week is they came out and said, we're going to raise rates, the federal fund rates, 25 basis points or a quarter. Okay, that was expected. 2 days later, one of the Fed officials came back and said, we're probably going to do 50. We probably should have done 50. And now the market is analyzing all this stuff and saying, based on the information coming in, well, we think they're going to do 50. Maybe not once, maybe twice, maybe more. So let me give you the headlines of what's going on. I finally figured this out. Okay, so right now Goldman Sachs is saying, well, they're forecasting the Fed's going to change or increase the federal funds rate 2 times, 50 basis points in May and June, and maybe continue from there. So let me just give you a backdrop of what's happening. So the federal funds rate is basically interbank lending. All right, so we were just recently at 0. Then they raised it a quarter. That had some fluctuations in the market. Some people were saying, whoa, what's going on? And some people were like, okay, it's needed. And then they came out and said, we're going to raise it 50, then another 50, and so forth. So just add this up. 2-3 weeks ago, the federal funds rate 0. Come after the June meeting, it's going to be 1.25. Think how quick that is. Okay, so now all the markets, the stock market, the bond market, everybody's trying to reevaluate everything based on bond yields, because bond is a piece of an investment portfolio that you're like, okay, I'm going to keep a piece of this as long as yields are high and all this other stuff. Now that's for financial planners, but I'm just trying to give you the backdrop of what's going on. So now people have more appetite for stocks. If it wasn't for the Ukraine-Russian war, stocks would be even further up and mortgage rates might even be worse. But, we can't tell. We don't know. I can't change history. I can't change the past nor affect the future. So that being said, with all this stuff going on, what else is in the news that could be affecting these things? So let's get over to that part of it. Well, the economic calendar for today, the only thing that came in was the pending home sales for February. And they were down 4.1% with the expectations of being up 1. Okay, so why is this? Well, I'm still contributing this to supply. Okay, you can't sell anything if there's nothing there. Plus the supply chain issues. Things aren't getting bought or built in time. The number one question that I had last night on my YouTube Live was, Dan, if I take the extended lock and my builder doesn't finish the house in time, then what? And I'm really doing research on that to figure out how we can create something for everybody out there that's in that dilemma. Because most lenders right now will give you a one-time rate extension and it's not cheap. Okay, so that's what I'm working on in the background. But the inflation numbers for the coming month, when those come out, it's even going to be more brutal because we have now these escalated gas prices built into it, which last month's inflation numbers didn't have, and a lot of people didn't know that. So the future in the next couple weeks isn't looking pretty bright. So let's get on to the rest of the news. Based on all this stuff, what's going on in the MBS market? Well, right here, we're down 30. But let me just explain to you why I don't use this chart. I actually subscribe to a service that's not that cheap, but it's right here. You can see this one says we're down 41, but this one says we're down 30. Well, this is the one any consumer can look at, and this is the one mortgage professionals subscribe to. Why do we subscribe to this, or why do I subscribe to this? Well, that's a great question. You can see where one chart was down 30 and one's down 40. Just think if that was a stock and the stock is dropping, and I know it's down, $3 a share, but my other chart's saying, oh, Dan, you're down $5 a share. It's going to get to $5 a share down. I'm going to jump in and sell everything I got because I know it's going down an additional 2 points. So basically think of that in the mortgage field. I'm seeing this a little bit ahead of the market, a little bit ahead of consumers. So this gives me a little leeway to say, okay, mortgage rates are falling. well, I'm not going to do anything. But on the other side, if we see mortgage rates going up, I might be able to grab a rate that's a little bit lower before all the banks repost and maybe get you an extra 0.1 or 0.2 lower in rates, because I know they're going up and I'm locking you before the actual rate increases flows over to all the consumers. That's just another way we help our clients. So that being said, let's get on to, unfortunately, where mortgage rates are at. So these mortgage rates are basically where we started the day or ended yesterday. You're going to see a pattern through here, but these patterns are going to increase even further because we know the MBS market is really tanking right now. So let's go across here. This is the national averages posted by Mortgage News Daily. We got the 30-year fixed rate coming in at 4.71, up 3 basis points, and is now coming in with a cost of 0.4 in points. So that means this rate is probably 4.875 if you didn't have to pay any points. So closer to 5 and faster to 5 than I even anticipated. Then you have the 15-year coming in up 7 basis points to 4.7. It also comes in with 0.4 in points. We have the government loans, FHA and VA, coming in at 4.38, up 6 basis points. 30-year jumbos up 5 basis points to 4.10. And the 5/1 ARMs are actually on actually their rates are coming down right now, coming in at 3.85. We go down through here, and the chart is what the chart is. But the weird thing is, you can see the trend here for the day is positive or close to positive neutral on the MBS market. Well, how in the world can that be if the MBS market is down 44? So take that with a grain of salt. That is the morning bell. I'll try to post more updates as I see them. If I see there's any catastrophic events in the market that really should freak you out, I will post. I'm also working with, trying to work with a couple lenders on the extended lock program to see what we can do to give you additional locks if and when needed. So I'll be posting a video on that for those out there for that. So guys, I hope you find value in my channel. I know every day we go over the rates and so forth, and I post in the evenings specific things, and I hope you enjoy them, and I hope you find value in those. So otherwise, if you haven't yet, please subscribe to my channel, give me a thumbs up, hit the bell. Every time I post video, you get an alert. I'd love to talk to you. We are now the largest brokerage in the country. If you need any help with a mortgage, please check out the rateupdate.com. Give us a call, or you can even chat with us with our new chat bot. So take care, guys. I'll see you later this afternoon.